Welcome to this Brealey Foster Talking Points video. Today's topic is tax and VAT. So money makes the world go round, and HMRC wants their share. Much tax is collected by VAT and corporation tax, but income tax too is an important source of tax and also information for HMRC. In 2025-26, VAT is expected to account for around 14.7% of total UK tax receipts of 1,227 billion. This compares to national income of around 3,3057 billion. The maths suggests that government expenditure accounts for around 40% of national income. Government expenditure often sits close to or above 40% of national income, gross domestic product, varying by country and economic conditions. For instance, UK public spending recently accounted for roughly 40 to 46% of GDP, while the OECD average hovers around 40%. Key spending categories. So current expenditure is the day-to-day running costs for public services like healthcare, education and defence. Public goods which the market is unlikely to provide, or at least provide fairly. And then there's capital expenditure, long-term investments in national infrastructure, buildings and fixed assets. And then there's social protection, welfare payments, pensions and income support that form a major part of public budgets. Economic factors, historical trends, spending proportions typically rise during crises such as the COVID-19 pandemic, wartime, before gradually shifting back. International variation. Advanced economies often see higher ratios depending on the scope of state-provided services. Does HMRC raise all the revenue it could? Does government need to spend all the money that it does? There is much, indeed endless debate about this. The overview of VAT, value-added tax, VAT is one of the three largest sources of tax revenue in the UK, alongside income tax and national insurance contributions. For 2025-26 financial year, VAT receipts are forecast to be approximately 180.4 billion, representing about 14.7% of all government tax revenue. This is equivalent to roughly 6,250 per household and 5.9% of national income. So context and comparison, income tax, the largest single source, is expected to raise 330.7 billion or 26.9% of total receipts. National insurance contributions, which have seen sharp rises to 15% of wages for employers, that is forecast to bring in 200.6 billion or 16.3% of total receipts. So you can see, comparing income tax 26.9% and national insurance 16.3%, how significant national insurance is. By contrast, corporation tax raises half that. and corporation tax is expected to contribute 95.8 billion, or around 7.9% of total receipts. Together, income tax, NICs and VAT make up around 2/3 of the UK's total tax revenue, highlighting VAT's significant role in government finances. Now the VAT mechanism. VAT is an indirect tax levied on most goods and services at a standard rate of 20%, with some items subject to a reduced rate of 5% or zero rated entirely, such as books and children's clothing. It is collected at each stage of the production and distribution chain, rather than only at the point of sale, which differentiates it from just a simple sales tax. Approximately half of household expenditure is subject to the standard rate, while around 2.5% is taxed at the reduced rate. In summary, VAT contributes a substantial share of UK tax revenue, around 14 to 15%, making it a key component of government funding alongside income tax and NICs. So that's all for today, and I hope you enjoyed that talking point and found it informative.